The recent sell-off in the US stock market may seem worrisome, but a look at historic data of the S&P 500 may suggest that dips, pullbacks, and corrections of 10% or more are a normal and healthy part of any bull market. How often do these pullbacks and corrections happen? On average, US stocks experience a dip of 3% more than 7 times a year, a 5% dip more than 3 times a year, and a correction of 10% or more once a year, even in positive years for the S&P 500. Looking at the S&P 500's pullback over the past decades, 94% of the years since 1928 have experienced a pullback of at least 5%. And the average number of 5% pullbacks is about 3 per year. 10% corrections are less common, but it still happens 64% of the time, on average at least once a year. So far in 2024, the S&P 500 has had 2 5% pullbacks, and there's been no 10% correction yet. But some market analysts are expecting more dips for the rest of this year. Some of them are even expecting a 10% pullback for the S&P 500. Could things go lower from here? No one can say for sure. But historically, severe market corrections or even the bear market happen less often than the 5% or 10% dips and pullbacks. Volatility is surging in the US stock market, so we still have a lot of uncertainties. For example, the elevated inflation, the recessionary concerns, the high valuations of mega-cap technology firms, and the upcoming US presidential elections. Therefore, the pullback we saw in the stock market is pretty normal, and it's still not time for investors to panic just yet.